that will make the market, for example, continue to do that which you say. So I'm going to share my whiteboard so that I'll start answering your questions in a practical manner. I hope you can see the whiteboard. Victor, can you see the whiteboard? Can we see the whiteboard? Please, I need answers. Can you all hear me first of all? Can you see the whiteboard? Hello. Can you hear me? Someone have to talk so that I can continue. If you can hear me, just all right. And can you hear me also? Just reply. I need your voice.
I can hear you.
All right. Sorry, Mr. Adam, is that you? Or engineer?
I can hear you.
All right. Now, this is the thing. Whenever you actually want, for example, you want to sell the market downtrend, you want to do this, sell the market to a downtrend. Now, before this particular drop down, what happened? We know there's a particular bullish trend that goes up this way. Now, after the bullish trend, price does this. Price decided to break the market structure here. Now, in breaking market structure and changing their hand, now, Chidebere, assuming this is the 5 minutes time frame, assuming this is the 5 minutes time frame, and you enter your trade from this 5 minutes time frame, first of all, you want to understand that the main time frame of the 5 minutes is the 30 minutes. So your first point is you want to expect price to touch the 30 minutes time frame region.
Sorry, please come again.
Good. Assuming this is the 5 minutes time frame, and the main time frame of the 5 minutes time frame is the 30 minutes time frame, you want to expect price to go down to your 30 minutes target. That is where you want price to go. You want price to go down to your 30 minutes target. Now, that is the first point you have to consider, because you are entering from the 5 minutes. Now, when price gets to your 30 minutes target, two things are involved. It is either price does this and continue dropping, or price decide to do this. Or price decide to do this from that same 5 minutes time frame. Break the structure and start going back up. Why? Because we have a 5 minutes break in market structure here. 5 minutes BMS. And because of we have a 5 minutes BMS, the market is going to come down to your 30 minutes target, first of all. Why is it a 30 minutes target? Because that is the main time frame of the 5 minutes. In a sense, when you enter from 5 minutes time frame, you don't want to hold your trade for so long. You want to be targeting it within 30 minutes and 4 hours. So you want to target it within this range. But that does not mean you cannot take a long-term entry from this particular lower time frame. You can, but to be on the safer side of profits, you want to have this little understanding inside of you that 5 minutes have to wait 30 minutes and 4 hours. So if you are taking a 5 minutes entry, you want to close when price breaks the 5 minutes market structure, when it gets to the 30 minutes target. Now, I said he's going to do this, or look at the next scenario there. He's going to drop. This is another scenario. Come in, this is the second scenario. This is the second thing that the market is going to do. The market goes down. Remember, it's an uptrend. It will keep going up, break market structure, go up, down, break market, come down, come down. When it gets to the 30 minutes target, it's going to do this. Watch, it did not break market structure. Instead, it's going to range, then keep on dropping. This is the second scenario it's going to do. And we still have this particular zone. We still have this particular zone here. It's going to break the 5 minutes market structure. Then, when it gets to the 30 minutes target, this is supposed to be our 30 minutes target. But what will the market do? The market is going to range. The market is going to range. If you notice why they are ranging, why they are forming their range, something significant happened. And what is that? They couldn't break the market structure. Sometimes they might break it and they will close above it, but they could not. And what did they do? They drop price, continue to trend. Now, in this particular scenario, they are looking to target the 4 hours, or they are looking to target the 1 hour market structure targets. So this is how the market actually moved, transformed. And why is this place? Look at it, the 30 minutes target. It's going to be even a moving average region. Now, this is the second scenario they are going to form. Now, the third one they are going to form, I'll show us that. This is the third one they are going to form. Let me still put it under it so that you can see the three of them differently. I think I can draw it here. All right, this particular point. This is the third one. This third one is influenced by what I call the buy and the sell model. Now, when you've watched the buy and the sell model, when price goes up, break market structure, retraces back, then drop to the 30 minutes target. When it gets to this 30 minutes target, then it did something like this. And keeps dropping. Why did this particular price hold price? Now, according to the buy and the sell model, it is either this is, for example, when the buy and the sell model, first of all, simply state that when the price is on the bullish market, bearish market, and the daily time frame close, you are expecting price to retrace back to 1 hour moving average the next day, then form their hand, then they drop throughout the whole day. This is for daily. If price is bearish for the weekly, you are expecting price to do what? At the end of the week, that means for this week now, and price form a weekly candle, we are expecting price to retrace back up higher to the 4 hour moving average. Here is 1 hour. Form their hand. Remember, the moving average is the key level we are looking at. Form their hand, then they drop. Now, it is only in this scenario And when it comes to the daily time frame, you are expecting price to get to the daily top here at the end of the day, month. First of all, for the month, get to the daily top, then drops drastically for the rest of the month. Now, it is due to this particular buy and sell model that will make price retrace back up for long, then keeps on dropping. Now, this is the scenario that will play out, the three scenarios that is going to play out, and these are what I want you to understand. So I will right now go down to sharing my charts so we can take practical example. But before that, do you really understand what I just explained?
Yes, I understood.
You understand, right?
But I want to ask,
Okay.
like, I understood more. Just
Okay, you want to ask that what?
more.
Hello, I can't hear you. Can you type your question instead? Type your question instead. Type it. I can't hear you. Type your question, please. I can't actually hear you. Why is the main time frame of 5 minutes? Of 5 minutes, not 1 hour or 15 minutes? Victor, you have to watch the time frame sequence. The main time frame, whenever the 5 minutes is the primary time frame, according to the system, the main time frame becomes 30 minutes. Yeah, it's the just watch the time frame sequence. You will get more understanding. Why? It's because of the alignment. They align well compared to the others. 5 minutes with 30 minutes, 15 minutes with 1 hour, 1 hour with daily, 30 minutes with 4 hours. That is how it is. Daily with monthly, 4 hours with weekly. That is how it is. So watch the time frame sequence. You get to understand more. Now, let's now go down. Nelson, you're welcome actually. Very, very much welcome. Now let's now go back to our chart so I can explain this example for you. I can explain what just happened. Now this is it. We'll go down to our chart so I can actually explain what happened. So I'll bring out a new share and share this. All right, this is now my chart. Can you see the MT4 chart right now? Can you see my MT4 chart? Hello, Victor. Can you see my MT4 chart? I guess the service is very, very, very bad. I really, really want him to come so that we can actually finish this. It's actually his question. So I don't know. I wanted him to be online so I can actually answer this particular question of this. Wow, let me see if I can actually get him online to come back online. Then I can after this question, I will not go down to I'll go down to answering engineer's question on entries. Then after I answer engineer question and entries, that will be done for today's class. Then on Monday, tomorrow we discuss again. All right. My service actually went off. All right. So Victor, I'll be explaining your particular question with a chart analysis right now. So here is it. Now, this is a 30 minutes time frame. This is a 30 minutes time frame. Remember, I use 5 minutes and 30 minutes in your particular chart. All right, the service is actually fluctuating, so pardon. All right, I use 5 minutes to 30 minutes in the graphical illustration I make use of. For this time around, I want to make use of the 30 minutes and the 4 hours and the 1 hour, so that you'll be able to understand the play between the three of them, the 3 time frames. And I will show you the 3 model. I showed you what price can do. Now I said something that price can do this. I said something that price can actually do this. Price can actually do this. Price can actually do this. Okay. I'll make use of a bearish example. I said price can actually do this. Up, 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 break the market structure here. Then continue the move down. Now, the first model is when it gets to the 30 minutes time frame, that means the primary time frame, it continues, it changes direction. And that is what happened in this particular point, first of all. So we are going to take, first of all, take the first way I said is going to happen. The first way it's going to happen. That's what we are going to first of all take. Now, in this particular scenario here, what we have price. Should I still go down? Still go down. Let me see. So I can actually start on the bottom. The further I go, the more intense it becomes. Let me just make use of this particular low here. This particular low here. Yes, this one. Let's start from here. And this top. Good. Let's start from this area. Now, this is the particular move up. This is the move up we talked about. That means this particular move you are seeing here, this is it up. Now, the market went up, did this, tried to break market structure, did not break. This is the market structure around this region. Breaks the market structure, retrace back up, then drop. Now, it has done this, the 30 minutes time frame. Now, what happened at this particular zone? If you go down to the 4 hours, let's see if there's a 4-hour touch there. If price actually touch the 4-hour moving average and the trace, okay, that is it. Can you see price did what? price touched the 4-hour moving average. This is the 4-hour moving average here. This is the level we are looking at, this particular point here. This particular point here. And price actually touched the 4-hour moving average level. And what happened? If you note, if you go back to the 30 minutes time frame, which is the time frame of our first entry, our initial entry, 30 minutes time frame, look at it, look at the cycle I drew, you'll notice something. What happened? You notice something. Trying to shrink it. All right, this is it. You notice something. Price came down because of this is the 4-hour level we are talking about. Price came down and did this very, very, very sweet move. They brought price down, took it up, down. Because of this is the 4-hour level. Can you see just what I showed here? That is what they did here. Broke market structure and took the price back up. So you as a trader, you are supposed to have come out when you see price breaking market structure at this particular region. That is the best area where you should have come out on a particular trade. Now, you can see how the first model works. You can now see how the first model works. Now, the second one I talked about, I said, let me clean this. I said, price can actually come down here, go back up, continue retracing, then get to this particular 30 minutes level, could not break market structure. Instead, they will grow deeper because they want to drop price to, let's say, the 1-hour time frame, the daily time frame target. Now, let's see what happened here at this particular point. Let's see what happened here at this particular point. Yeah. Now, this is still the 30 minutes time frame we are looking at. Price went higher. Price went higher. So I'm trying to get the area. All right, let me just clean all this. I'm coming. Now, the second one, after they did that, I'm trying to get us the second one in this particular trend. Yes. In this particular trend. The second type of model they will do is to run over to the next time frame, to run over to the next time frame target. And that is why I'm going to make use of this example. I'm going to make use of this example here. Now, from this particular example at the top there, we have a break in the market structure. And this is where they break market structure. Yeah. We have a break in the market structure. At the end of the 4 hours, let us confirm the market structure. Yes, this is where the market structure was confirmed. Arrow down, this. Now, let's now take a bracket, a box, and put it here. You notice what happened. Let's go down to 30 minutes time frame. What did they do? They did what we said they are going to do. They dropped. This was the close, and they took price back up. They took price back up, ranging, and they drop it again. Continue till they get to their final target down here. which is what the daily, this place now you are seeing is, this place now you are seeing now, it's the daily time frame target. And if I come down to the daily moving average here now, you will see that it is a daily moving average they are trying to target. All right. Okay, the price market has not looked. The daily moving average they were actually trying to target. I'm very, very sure they did not actually get down to this point. They did not get down to this point, and I will explain that was that because of the third model. Because of the third model, they could not drop down to this daily point. I am very, very sure about that. That's because of the third model. But what I want us to be interested on is this particular area, how they changed their hand. They couldn't break the 30 minutes time frame market structure. They could not break this 30 minutes time frame market structure. That is what I want us to be interested on. This particular time frame market structure, they did not break it. Why they were targeting the daily low. Just like I said, they are going to do this. This is our 30 minutes time frame. They are going to range in the 30 minutes time frame without breaking the market structure. Range and drop in order to target the next lower. That is where our average rejection bar comes in. Our average rejection bar comes in because the rejection can either be at the 4 hours moving average, or it can either be at the 4-hour market time target stop. That is where you are going to see this average rejection. Now, the third particular form is this. We have 8 more minutes, then we'll go to the next particular question. I'll send a new link. Now, this is the last point I want to discuss based on the question of Victor. The last point is this. The last point is actually this. A situation whereby the buy and sell model, affected price. Now, I want us to take example this one. Now, the buy and sell model, simply to cut it very, very short and fast, this is it. When the daily time frame close, for example, for the day, let's assume daily time frame close on Tuesday. Then what you want to be doing on Wednesday is to wait for Wednesday to retrace to 1 hour level from the daily time frame, to retrace to 1 hour level. When it retraces to 1 hour level, they are going to form their hand there and continue the normal trend. Now, I'm going to show you an example here. Now, this is the particular box we're looking at, this one, this particular area. Now, this particular point, this particular week you are looking at here, this week, or this week you are seeing, they denote something. They denote something, or this week you are seeing. And what is this? These are the levels in the 1 hour time frame that the market reacted to before going back up. The key levels in the 1 hour time frame that the market reacted to. Now, this was so quick and very fast. This is very, very quick and very fast. Come. Oh, thank you. This is very, very quick and very fast. Unlike this particular place where the market is very, very rough, you will see more of the model here, very, very fast. Unlike this one is too fast. So the model here is either they form something like this, go up, they are arranging it in a particular flag pattern and not this particular way, full zigzag. Now, what are we to do? It is expected that once price close for the day, like for example, this particular bullish bar that is here, I'm still talking about the model. The next bar, price is going to come down to 1 hour time frame and look for a support, a key level in the 1 hour of that previous day, then continue going back up. Now, that previous day, the key level can be the moving average. And that is what we are expecting in this particular scenario. Yeah. And that's what we are expecting in this particular scenario, this particular point here. This particular point here, these big 2 areas. So let's go quickly. Now, remember, let's assume this particular buy is what we are seeing. This particular bullish buy is what we are seeing. Now, price closes on this day. Then the next bar opened. We are expecting price to drop. But what happened? If you come down at the beginning of the next bar, That means the 30 minutes during the early days. This is it. Price form a perfect, look at it, a perfect break in the market structure. A perfect break in the market structure. Price form this. We have a perfect break in the market structure. Price form this. Look at it, a break. And what did they do? They went up, back, and they drop. Now, upon dropping, this is a break in the 30 minutes. We are supposed to do what? Since we have a break in 30 minutes market structure, if you come down to the 4 hours to confirm the market structure break, you will notice one thing. And what is that? There is a break. This is the particular level we're looking at. There's a break here. This is our market structure region. There's a break around this point. Look at it. We have a break. These are our breakout candle here of market structure. So we are expecting price to drop down to this particular moving average level. But instead, price did not drop down. Why didn't price drop down? It is very simple, because of the buy and sell model, which simply says that whenever the daily time frame closes, we are expecting price to retrace back to the 1 hour time frame. Now, if you notice, if I come back to this 1 hour time frame now, you will notice something. What happened? It is at this particular 1 hour time frame, this particular point here, that the market changed their hand. The market changed their hand at this particular 1 hour time frame. The market changed their hand. We're supposed to see something like this. This particular point, drop, this, so that is too big. We're supposed to see something like this, something in this manner. A drop, up, down, till we get to the 4 hour moving average target. But instead, price did not get to the 4 hour level. Instead, it changes the hand from this point. And we have a breakout. Why? Because of the daily model. That is why. So whenever you say this, Victor, take notes. I believe I've answered this question. Please ensure you watch this video over and over again and go back and back test and see what we are talking about. So we'll be on the same page. So I'm going to end this particular class and then send a new link so I can answer engineer's question on derive volatility 50. Then we'll be done for the day based on entry. Are we good with that?
Yeah, I understand to an extent. I will keep watching the video so it becomes refreshed.
All right, thank you.
Thank you.
Yes, sir. Then I end this one now. I believe I speak at a lower pace this time around. It's better compared to when I rush while speaking.
Yes, he just took time to explain this one.
Right.